Home value is a fixed position in the market as an asset. So things inflate over time. Fixed assets
Yeah.
inflate too. It's
Yeah.
I'm not going to say it's like gold, but it's similar because you take ownership of something.
Mm-hmm.
Although I would say that really we don't own anything. We just have the privilege of paying taxes on it
Yeah.
and controlling it while it
Yeah.
hopefully appreciates.
Yeah. Yeah. Josh,
Hey, how's it going, buddy?
good.
So for all the listeners, I was just complimenting you on your beard.
Oh, thank you. It took me a while to grow it.
It's fantastic. I am very jealous of that thing. How long does it take you to grow a beard like that?
I started in July of last year, so it'll be coming up on a year. So my buddy, my trainer, he actually is the one that got me into the whole beard growing. So 4 years ago, I said, "Hey, you should grow a beard. You look really good in a beard." And he started growing his beard. Well, now it's down to his waist, and he posted some videos on TikTok.
He looks like a wizard then.
He does, or a Viking, or somewhere in between.
Somewhere in between.
And so he posted a video on TikTok, and he got 125 million views.
Well, it's hard to do, man.
Yeah.
No, I haven't shaven in 3 days. I was telling you that. I don't even grow a beard, so I'm very envious and jealous. And
thank you.
I don't want to see the warlock guy you're talking about. I'm sure he looks pretty cool too.
Yeah. Well, we'll see how it goes. It's working right now. It's working right now. So Josh, thank you so much for coming on. I really appreciate it. Yeah. So we have Josh Barker. I'm going to do a little introduction for you. So Josh Barker, you live in Reading here. You've been here for a long time. How many years you been here? Reading?
Well, moved up here in 1976. I brought my parents with me. So it's been a while.
You were what, 1
years old? Yeah.
One. Okay. Yeah. Nice. So long time in Reading. You've been in real estate for 23 years. Your husband, father, real estate broker in Northern California, with 23 years of experience, over 7,000 properties sold, which is really impressive. Josh strives to provide the very best service to buyers, sellers, navigating the real estate landscape. Josh's personal and professional experience with investment property acquisition, which is cool, land development, commercial and residential construction, as well as 1031 tax-deferred exchanges.
Yep.
So very, very well knowledged in real estate. Josh is a Reading native, Marine veteran, and has been married to his lovely wife, Nicole, for 25 years. Together, they share 4 amazing children, one of which has recently joined the family business.
Yes, that's right. She's 24.
Yeah, that's awesome. Yeah. Josh can often be found with his family exploring all the beauty, the outdoors of the area, and also in Disneyland. I added that part.
You should add that part. My wife would appreciate that. And actually, I think it's been 26 years married. Otherwise, she'll judge me for that one too.
Got it. Okay.
I see everybody. I gave this bio to Petey. One of the questions he asked you is, "Can you please say something about yourself?" So, thank you for reading that.
Yeah, for sure. I mean, obviously, I've been doing mortgages for 20 years, and I met you very early on in my career.
That's right.
Yeah, and I got.
You guys were at Benchmark, right?
No, we Beneficial.
Beneficial, because you guys were doing seconds back then.
We were doing seconds, and
That's
we were
right.
charging 5 points up front.
Good Lord.
Yeah, it was. That's how I started. That's how I learned how to do a mortgage.
Yep.
And got introduced to you. You helped me buy my first investment property.
That's right.
And helped me sell a property.
Yes.
I bought a couple of properties through you.
Yeah.
And I feel like I've known you for a very long time. So
It's been a while, man.
I really appreciate you coming on.
Well, I appreciate you too. Thanks for having me.
Yeah, so I wanted to start with you just sharing your story of how you actually got in the real estate world.
Okay.
Because you obviously I can tell you love what you do, and you've been doing this for a very long time. What keeps you going? What keeps you active out there in the community?
Well, you said it earlier. I've got 4 kids.
Yeah.
So there's 2 things that motivate me. One is paying for college, and the other one is I have 4 kids.
Yeah.
It's easier to go to work every day.
Yeah, it gets expensive.
Yeah, it gets expensive. So no, I think I was exposed to sales when I was a kid. My dad was a real estate broker. Grandfather was a real estate broker. One of my best friends was a real estate broker, still is. In fact, we get to work together now. And so it was probably, written long before I already knew it,
Wow.
that it was going to be something.
So did
I'd
you
really
know
fall
you were
into.
going to get into real estate growing up with having all of the family members being in real estate?
No, not at all. I mean, in the Marines, I thought I was going to stay there forever. It's just that I met my lovely bride of 26 years.
Yeah.
And I was deployed a lot. And so in order to keep a marriage together in our situation anyway, because it's hard for married families to stay together when somebody's working all the time, just felt like I needed to say, okay, this is great, but it's time for me to move on if I want to be in a happy marriage.
Yeah.
And then looking at the things that interested me, family, I think probably had a little bit of a pull on that, just because I had exposure to sales, and I was the kid driving around when I was a kid listening to Zig Ziglar and
Wow.
all these guys, right? So I probably didn't have a chance.
And that was influenced by your dad?
My dad, yeah.
Okay.
So you drive around and I'd be listening to these business tapes, and at the time you don't really pay attention, but later you're like, hey, I've heard that guy before.
Yeah. Subconsciously.
Yeah, totally.
Yeah. Okay. So you grew up. Your family was in real estate. You had your dad. You met Nicole.
Yeah.
In down in San Diego when you were in the military.
Yep.
And then you're like, hey, let's go back to Redding, close to my family, and let's get into real estate.
Yeah, pretty close. I didn't actually want to come back to Redding. My wife did. I came up here for a family reunion, brought my beautiful fiance at the time to introduce her to everybody.
Okay.
And she's like, why aren't we living here? And I'm like, because we live in Huntington. That's kind of good down there too, right?
Yeah.
And because I had just got out of the Marines and we had stayed down there for a little while going to school. And, she really did lean into me a little bit about, hey, you know what, this is a great quality of life in Shasta County. I think it's a little bit better than the quality of life we were looking at in Huntington.
Yeah.
And, at that time I couldn't disagree, and thank God we did it.
Yeah.
Yeah, made the move.
Well, you definitely made a huge impact for our community. I definitely know that for sure. I mean, I've always looked up to you as for in the real estate, and I've always wanted to model my business after yours as well. So like,
well, thanks,
it's
man.
definitely been an amazing.
Wow. Well, thank you. That's very nice to say.
Yeah. Okay. So along with that, we're in a crazy kind of different market.
Yeah, I think so.
Yeah.
So you've been paying attention.
Yes, I have very, very much so. The going into COVID, I had no idea that obviously none of us knew what COVID was going to bring.
Yeah.
But coming out of COVID, it's a very different market. Interest rates are higher,
Sure.
and I really wanted to pick your brain on just kind of where we're at right now.
Okay.
There's a lot of people out there that are maybe concerned, maybe unsure, uncertainty of the future. There's a lot of things going on with the media.
Yeah.
And so when it comes to real estate, it's the number one investment that people have. And so it's a big topic. So
it is a big topic.
So the first question I have for you is, what, as far as market, over the next 1 to 5 years, where do you see the market for real estate values? Do you think there's going to be any kind of crash, or do you think that what's going to happen over the next 1 to 5 years with your experience?
Okay, sure.
Yeah.
Well, let me just go ahead and grab my crystal ball here and let me bring that out. Well, I mean, look, let's take crystal balls and set them aside. Let's talk about a few things we do know. Okay. The number of new homes being built nationally is really low. I don't think anybody's disputing that, right?
Yeah.
We are behind on our replenishment rate for new construction. Nobody's really disputing that.
Yeah.
Our inflation issue has certainly caused interest rates to go up, which is having an impact on purchasing power. I don't think anybody's disputing that.
Yeah.
And then the elephant in the room. We've probably brought in 10 to 12, 13 million people over the last 3 years. And politics aside, those are economics. The supply side is not keeping up with the demand side. And a lot of those people that we've grown the population of the country by are not babies. These people need places to live. So
this is the generation, the baby boomer, or sorry, the millennials and Gen Zers. What is it?
Well, I don't know what the median age is for the kids coming across the border right now, but I'm assuming it's probably 17, 18, 19 years old.
You're talking about people coming across the border.
Yeah.
Got it.
And I'm talking in the last few
makes
years.
sense, yeah.
I mean, because normally, historically, it's taken about 19 years, or actually 18 years and 9 months to grow an 18-year-old. That's how long it's taken.
18 years and 9 months. Yeah.
Historically, that's how long it takes, right?
Yeah.
We have completely accelerated that process by opening up, the floodgates, if you will, of migration. And as a result, we have, again, maybe 12, 13 million people in the country. And no politics on this at all.
Yeah.
Just the reality. Is there an increase in demand for housing?
100%.
Okay.
Yeah. 100%.
That is a reality. We were already in a massive deficit for housing to start with. Now we've just magnified that issue. So if you ask me 1 to 5 years, and that's why I'm giving you this context, 1 to 5 years is hopefully we can begin to tackle the problem.
Figure as far as
Because
inventory.
That's right, because we are going to be tight on inventory. And the question will be, will home prices go up? For some, want to know that. And on both sides of the equation, if you're a seller, you're like, yay. But if you're buying the same market, you're like, no, right? Yeah. The reality of it is that what interest rates do will tell us what prices will do. You know, so if rates go down, home values are going up, right? And if rates go, stay up, then it's going to be hard. It's going to be a harder process.
Be harder. Yeah. Why do you think that builders haven't been able to keep up? Why do we not have more builders in the market building homes?
Well, right now it's because of the interest rates. Because they're dealing with fixed realities. It costs X amount to buy a piece of property. It costs X amount to develop the property and get the permits and entitlements. It takes X amount to buy the supply and the materials. It costs X amount for labor. You add all those numbers together and you have Y.
Really hard.
Right. And then whatever that Y number is, can a buyer even qualify for it? And so when rates go up, it puts a lot of pressure on purchasing power. You have buyers right now. I mean, if rates drop by 1% today, new construction on new homes would probably be able to kick off a little bit more. But we're not there today.
Makes total sense. Yeah. So what I heard you say is over the next 1 to 5 years, you're very optimistic with real estate staying consistent.
I don't think we're going to be oversupplied.
We're not going to be oversupplied. We'll still have a challenge with the supply coming on the market, but the demand's going to continue to be there.
I think so. I mean, and I'm not an overly complicated guy, right? I look at economics for its most simplest way of looking at it. You have supply and you have demand. Okay. And the factors that pull on supply and demand are the factors I pay attention to. Right now we're in a housing shortage, and we will continue to be in one as long as we increase our population at the rate in which we're increasing it.
Makes total sense. So, which brings me to my next question. There may be a lot of homeowners out there right now that do have that family size increase. And they need to make a move, or they're hitting that retirement age and they need to make a downsize move. I know there's a lot of families on my end too that are waiting. They're kind of on the sidelines, and that's demand too. Waiting to happen. So do you have any kind of recommendations for families that may be on the sidelines, or potential things that they could think about, not just the interest rate and not just the payment?
I mean, I'd like to say that, but boy, it's hard. I mean, it's really hard. I listen to some of the reports that come out, and they say, oh, the perfect time to buy or sell a home is when you're ready. I'm like, that's not right. I mean, there's good and bad times to sell a home, and anybody that doesn't tell you that isn't being honest, What we have right now is we have an economy where a huge amount of people either purchased or refinanced at a rate that's equal or lower than 3%. And today, if they were to purchase another home, they're going to have to relinquish that 3% rate in some cases, and they're going to have to go buy a home at a 6.5% or 7.5% interest rate. That's a massive jump in payment, right? And so for those reasons, I say, you may or may not want to do it, okay? Which is why when you and I are looking at this report right now, we see that, last year there was 3,821 total transactions. And if and that's homes that sold, we haven't had that happen in 20 years. There hasn't been a time that it's been that low in 20 years. And so it's because a lot of people are in these homes at interest rates that are extremely competitive. And as a business decision alone, it doesn't make sense. Now, here's what you probably do want to think about. If you're thinking about waiting for home prices to go up before you sell, you have to ask yourself the question, well, are you going to be buying again too? Because if you sell your home for more, yay, but you'll be paying more for the next one. Not so yay, right? And on the flip side of that, if you're a person that's thinking you're waiting for prices to go down, like we said earlier, refer back to inflation or refer back to the housing shortage. The chances of pricings of homes being a lot lower than they are today is pretty unlikely because interest rates are likely to go down in the future. So,
that makes sense.
You gotta wait out.
So what I heard you say is for the person that's waiting for the market to appreciate before they can sell their house, then they have to also think about the buy side, because the home's going to be higher as well when they go to buy.
They're going to be paying more. So here's the question. Do you want to stay in the home you're in now waiting for the value to go up? Or do you want to be in your ideal home waiting for the value to go up? Either way, as long as you're in a home, you're going to receive the benefit, right?
Yeah, totally makes sense. And on the opposite side, if you're waiting for home values to come back down, then, well, of course, your home is coming down.
Your home's coming down too.
Yeah. Yeah, so it makes sense. So like if someone's in that position for that reason, they should probably start thinking about making a move, because either way on each side of the coin they're
Well, and I don't want to oversimplify this complicated prospect, but if you were to take a scale,
yeah.
you have the black and white and you have the emotional side of a scale. Black and white says I got a 3% interest rate.
Yeah.
It may not make a lot of sense to move.
Yeah.
But on the emotional side, my family's growing.
Yeah.
We're climbing all over
Yeah.
each other, and we're
Yeah.
not getting along very well. We need a bigger house.
Yeah.
You know what I mean?
Normally emotions take over. the
Right. So you
logic,
put it on the scale and you make a decision.
Yeah.
At least that way, if you decide you're going to sell and buy another home to make some more room for your kids, you've made a decision that, you know what, the emotional component at this point is outweighing the financial component.
Yeah.
You make a very sober decision when you make it, and you can be happy about it.
Yeah.
You know, I did that in 2007-08, right? I sold a lot of our properties actually just before the market crash. 05-06 is when we sold our properties off. I think you probably remember that.
Oh yeah.
And I was telling everybody the sky was falling. Everybody thought I was like smoking weed or something because they didn't believe me.
Yeah. You called me and said, Pete, we sell your house.
I tried to get you to do that. I know.
Yeah.
You're like, you just want to get paid. I'm like, well, that's true, but I want you to sell your house. So long story short, you know, what we did was in 07-08, you know, my wife and I moved into a rental on the river because we had sold everything.
Yeah.
And my wife, except for our commercial stuff. And my wife says to me, she says, you know, Josh, this is great. I know you're really happy and proud of yourself, but really we'd like to have a home for the family. I'm like, oh, so, you know, black and white says, wait, emotional side says, Mrs. Barker wants another home. I better figure this out. Right.
Yeah.
So I ended up buying a house. It took 9 months to move into, but it was because the best deal at that moment, because I was going to move forward, but the best deal at the moment was to have somebody build one for us.
Yeah.
You know what I mean?
Yeah,
So
totally. Makes
emotionally
sense.
justified though.
Yeah, so the emotions, so emotions versus black and white definitely have whoever is watching this, you know, think about the emotion.
Weigh it out.
Yeah,
you know,
weigh it
I'd
out.
rather be happily married than have a few more bucks in my pocket.
Yeah,
That's for sure.
yeah, makes sense.
Yeah.
Yeah. Okay, cool. Well, that's really good. So this next question that I wrote down, I was listening to someone, and I don't know if it's the right way to say this question, but I wanted to get your thoughts on it.
Sure.
So this is the question: impact of inflation on a 30-year fixed mortgage. So can you explain how a 30-year fixed mortgage becomes more advantageous during times of inflation, especially considering the aspect paying back with cheaper dollars over time?
Oh man, well that's pretty easy actually. You know, so even let's just say that you know the historical interest rate was how much?
On average, maybe 6, 7.
Yeah, 6.5%,
Yeah,
right?
okay.
So let's just use that number, you know, since it's you know a historical average, right? If I can secure an asset at 6.5% interest, right? And here's the thing. I get to receive the benefit of appreciation on that asset. I get to reduce the mortgage liability over a period of time, and I have a hedge against inflation in the future because I have the fixed expense. You know,
It's fixed.
It's fixed. It's not going up.
Yeah.
I mean, the only thing I might have is insurance might go up a little bit. I have property maintenance and repair I might have to deal with, and I might have a little bit of tax increase, but not a lot because in California we have Prop 13.
Yeah.
So we have some protections here. I've got a great hedge against inflation in the market.
Yeah.
And that is something that I think people overlook. I've talked to people who live in homes for 20 years renting them. I'm like, oh,
Yeah.
you know, they could own that house, you know, twice, you know,
Yeah.
and it's just a bummer.
On the flip side of that, when you say hedge, like for a renter, the difference for a renter then they're not able to hedge because it's not fixed, that payment.
Exactly. Well, and they're paying 100% interest.
Yeah.
You know, so if you don't own the property, you're paying 100% interest.
Yeah.
Because you're not putting anything towards paying down a mortgage balance.
Yeah.
You don't have any kind of write-off in terms of for tax savings for home ownership. You don't have the ability to have a position in the market to receive appreciation over time.
Yeah.
It's extremely expensive when you really think about it to rent in comparison.
Yeah. Absolutely. I 100% agree with that. The way this person was explaining it too, which is it goes along exactly how you said it was with the hedge, is as inflation continues, we're going to I think we'll continue to have inflation, and so there's more dollars going to be coming out into the economy, and those more dollars are going to then chase the hard assets, and so when you have a fixed cost on your mortgage, that's how the value continues to appreciate, which I thought it was really cool.
Well, anybody that thinks that there won't be inflation, the Federal Reserve has a mandate to cause inflation.
It's so crazy when you think about
You
it.
know,
Like that.
so and it's for decent reasons. I mean, it kind of pushes people into ownership too, right?
Yeah.
So that you have those opportunities to hedge. But
Yeah.
so you know, if the Federal Reserve, who don't fight the Fed, right?
Yeah.
If the Federal Reserve has a mandate to cause inflation, I don't think I'm going to try to fight that.
Yeah. Yeah. Totally. Makes complete sense. So that's cool. So talking about the Federal Reserve, it's a nice little segue into my next question here. Federal Reserve policies and interest rates. So a lot of people are wondering when the Feds are going to start cutting. Considering the current economic climate, do you think the Federal Reserve might lower interest rates? How would such a move affect buyers and sellers in the renting market? I know we covered a little bit about this, but I think more of like, when's the Fed gonna,
When are they going to do it?
Yeah.
Well, let me call Jerome Powell and let's find out what he says.
Yeah.
What they're looking at typically, the sources that I use for this, I use a handful of economists that try to give us some insight on what the Fed's doing, and then I listen to actually what the Fed's doing.
Yeah.
The Fed's pretty big because you have regions too.
Yeah.
You know what I mean? So it's not just the Federal Reserve or Jerome Powell, but you also have other entities throughout the country, and they're also their reserve banks as well.
Yeah.
And you listen to what they're saying, and that kind of tells you what Jerome's thinking, right?
Yeah.
But big picture, they're probably looking at somewhere around May, likely to do an interest rate cut in May, and maybe 2 to 3 subsequent cuts at a quarter basis point each by the end of the year, is kind of what the most recent best guess is. The reality is the job market's still pretty hot right now, which it's going to be because you have an infrastructure bill for trillions of dollars that's being spent in the country right now.
Yeah. Totally. It's inflationary.
It's totally inflationary.
Yeah.
And it's funny because the Federal Reserve is trying to target employment at the moment, trying to get the unemployment rate to go up. But at the same time, they're creating jobs. So the higher interest rate environment is hitting 2 people, banks and real estate. And there's not a whole lot of jobs in either one of those. There really isn't. I mean, when you really think about it. And so it's punitive to a very small group of, or a really small, it's a big part of the industry for the economy, but not a lot of employees.
Yeah. So before we started this, we were looking at this 20-year history in Shasta County.
Yeah.
And I was looking at it. I created this report. So like all the way back to 2003, we have the number of transactions. You let me know, hey, Pete, multiply that by 2. And I'll put this up on the screen so you guys can look at it. But my point on this topic is creating money in the economy. When the Federal raises or decreases the rates, it really affects like our industry a lot.
Yeah.
Because with your updates, I watch your updates, and you always explain, hey, we had this amount of transactions, or we're down this percentage for transactions from the previous month.
Yep.
And like 10 years ago, like 5 years ago, I thought that was like a decline in the market, but like really it's just number of transactions being lower.
That's right.
Which affects me, affects the realtors, the lenders.
That's right.
So there's not as many commissions going around in the economy. And so we were looking in 2020, we hit $1.1 billion in total real estate.
Yep.
And then it went to 1.4 billion, and then it was 1.2 in 2022. And then 2023, we did 926 million.
Yep.
And so a significant, so like it's $500 million less.
50%.
Less in
a couple of years.
In a couple years. So we're all used to, real estates and myself included, of making these commissions. It's the business, like bringing income in and
spending it.
Yeah, and spending it.
Yeah.
And then all of a sudden, it's just like, it's cut. By, 50%. So like in our local Shasta economy, that affects the economy because I'm not going out to eat as much.
Right.
I'm not spending at the grocery store like I was.
Yeah.
I'm not going to Holiday. Well, Holiday's good. It's not bad. But Winco is maybe a better choice potentially.
Sure. We'll bleep that out there.
Yeah.
The Morgans would appreciate it. Well, I think that it's you're hitting on something though. I think is important is that when the volume drops by in this case your example 50%, that has an impact on our industry lenders are doing fewer transactions, real estate agents are doing transactions. But that
Yeah.
does not mean the homeowner is
Correct.
dealing with the same 50% correction. Right now, if a seller prices their home competitively in the marketplace, they're going to sell. And they're going to sell relatively quickly too.
Yeah.
And for a buyer right now, I don't need to tell you, they already know this.
Yeah.
When they go out to shop, there's not a whole lot to choose from.
Right.
And it's extremely competitive when you find that right home. And so they don't feel like, hey, this is easy. This is hard right now because the inventory is really low because there's a lot of reluctant sellers that are sitting on what we were talking about earlier, that 3% interest rate.
Yeah.
But there's one little caveat to this whole thing that we have to kind of accept. If you look at the car fire, right? And then you had the Paradise fire.
Yeah.
Home builders in our counties, Shasta, Tehama, and maybe a little bit around the other areas too. For the most part, they've been very busy since the car fire.
Yeah.
When was that, 18 at this point, somewhere in there?
That's true, yeah.
I mean, they've been busy
2018.
since then.
Yeah.
They haven't slowed down until the last 18 months. That's when, the rates started going up is when they started to see things slow down. So in our industry, real estate and lending, we were receiving some of the benefit of that too. You know what I mean?
Totally.
We had the tail end of, resupplying the housing market, bringing up new listings to for sale. So we've been kind of in this regional stimulus, if you will, for a really bad reason. But we had a stimulus from the car fire and then the Paradise fire.
Yeah.
And so we're all at once now, we're having higher interest rates. Most of those homes that are going to be rebuilt have been rebuilt. And now you have this huge drop in volume compared to years past.
Yep.
And that's a hard reality. I mean, if you think about it from the county's perspective and the city of Reading's perspective, they run a lot of what they do. Absolutely. They run it off of the fees that they collect for both home valuations and number of transactions and units sold. And this is having an impact on it.
Yeah.
But it's still resilient, man. You see the town still, continuing to be in the fight.
Yeah, totally. Yeah. I was gonna, I forgot what I was gonna say, but what I'm hearing you say is like it's going to take time for all of that to trickle down to like the businesses nationwide, really. I mean, for the last, and just these numbers, it's multiplied times the whole United States on the number of less transactions, and so it takes time for it to slow down before, and this is why they will lower rates. The interest rates when the economy slows down.
They will. Well, when they see unemployment starting to go up, and then when they start to see, signs that the market really is slowing down. I mean, because the supply chain has been reestablished now.
Yeah.
Right. So that problem's been resolved.
Yeah.
Now they're looking at unemployment and saying, hey, we'd like to see that number go up a little bit because they got to put a cap on wages. I mean, there is a problem with wages too, because if wages continue to go up, then the cost of goods and services sold is also going to go up too, which creates its own inflationary issue.
Yep.
It's likely that we're going to start to see a cooling off period now.
Yeah. So my next question here is national debt. So how do you see the national debt and ongoing inflation impacting home buys? Is there a correlation both locally? We touched on this a little bit earlier, but locally and nationally with the national debt, I think the national debt is what, like
over 30
trillion dollars.
Correct.
Yeah.
I can't even,
fathom.
I don't even know what it looks like. That's insane.
Yeah. That's a lot.
Yeah.
So with more and more debt that the government has, does this scare you at all?
Yeah. I mean, there's two sides to the argument, I suppose. One side of it is they say, well, it doesn't really matter what the national debt is as long as they're willing to continue to issue it to you. I'm like, well, that sounds great, but what happens when they stop, right? I mean, and here's the reality. They can't just pay it all back, because if you wrote a check today for the $30 trillion and you paid back everybody that you owe money to, you instantaneously increase the money supply. And you cause inflation to shoot through the stratosphere.
Oh, big time.
You know what I mean?
I didn't think about that.
So you can't even pay anybody back.
Yeah, you pay everyone back, and all of a sudden everyone's got
so
this.
So what you have is an option, probably, and I think this is probably the Fed's ultimately looking at, is just to burn money. So when they collect, when the bond becomes mature, they just don't reissue it, and essentially that's like burning the money, right? So they just take the money out of the economy slowly but surely, and that's likely the path that we're on. I think to your initial question, though, how does this have an impact on home values? Well, home value is a fixed position in the market as an asset. So things inflate over time. Fixed assets inflate too. It's I'm not going to say it's like gold, but it's similar because you take ownership of something. Although I would say that really we don't own anything. We just have the privilege of paying taxes on it and controlling it while it hopefully appreciates.
Yeah. Yeah. Yes. Yes. Sorry, I'm gonna go. You said something that I want to get clarity on myself. Is the when the bond is paid back, they don't reissue. Explain.
Well, that's called quantitative tightening, right? Okay. So you got quantitative easing, you got quantitative tightening. It's a tighter money policy, essentially what they're doing. So they're saying, hey, look, once I get paid back the money I loaned you, right? Mm-hmm. So, or I issued you a treasury bill.
10-year treasury.
Right, right. Yeah. And so you gave me your money and I'm paying you an interest rate. Yeah. Well, once that thing matures, instead of me reissuing it again, I'm just going to stop issuing it. Mm. And that's a way of removing money.
Yeah, out of the economy.
Out of the economy.
Yeah, and that's what they've been doing.
Yeah. That's what they're doing right now.
Yeah.
So and that's why they're not buying mortgage-backed securities right now. Yeah. If they did, I keep on saying this. Someday, maybe Jerome Powell will listen to one of my podcasts, right? But I truly believe if they were to come out today and offer to buy mortgage-backed securities at around 4.5% for only owner-occupied purchases, period. Okay. And if they did that, you would get people that have rates at 3% willing to relinquish them for 4.5%. You get what I'm saying? You'd have home builders being able to build homes right now because they have a product in which to sell to somebody who can afford to buy it.
Interesting. So what you're saying is that they come in and they buy mortgage-backed securities for purchases only.
That's right. For no speculation, for owner-occupied only.
Owner-occupied only mortgage-backed securities.
Absolutely.
Yeah. That actually is.
It's like taking a scalpel and saying, all right, we're going to solve this issue in the housing market.
Affordability.
If you want affordability, you have to increase supply. Mm-hmm. If you have to increase supply, you have to help with people being able to purchase with an interest rate they can afford to use, right?
Yeah.
So again, please, everybody, share this a million times.
Yeah.
Hopefully somebody will do something about it because I think that would be a win for everybody. Plus the Fed. I think it's a good investment. Me as a taxpayer, I don't want the Fed servicing notes at 3%. I'd rather those get refinanced to 4.5%.
Right. Totally.
Yeah.
100%. No, that actually it makes a lot of sense. Yeah. So Josh, I'm gonna change this.
So Pete,
I'm gonna move from the debt and the Federal Reserve. I think we hit that pretty good. If you real estate investment strategies. Let's say you, with your knowledge that you have today, 20-something years in the business, you are a first-time home buyer, or you don't own any real estate. You're just maybe graduate college or coming into the workforce. What would be your strategy, knowing what you know today, like as far as maybe you would get in real estate, but as far as like housing. You know, what would be your strategy? What would you do if you're just coming out?
As like an investor, or as just a homeowner, potential homeowner?
Yeah, renter. Okay. Yeah, you're just getting started in life. Maybe you just got married, kids. You know, what's your first move? You know, things are tight.
Yeah,
things are tight. You know, and you're paying rent, and it's going to be a stretch.
Well, let me give you an example. My oldest daughter, Tristan.
Okay.
So she graduated from college. She comes home. She starts working with the family company in real estate, right? And she doesn't do sales right away. She's actually doing a lot of administrative related work for us first. Mm-hmm. And she starts to have income and everything else. And then she says to me, Dad, what should I do next? And I said, I think it's time to buy a house, which she did.
Wow.
Okay.
Yeah.
And the reason why I gave her that advice is because I told her, I said, Tristan, what you have to understand is that the sooner that you can take a position in the market, the better off you are in terms of appreciation over time.
Yeah.
Because you don't have to keep that house you buy forever. But if you take a position in the market, and let's say 5 years from now, you've paid down your mortgage balance a little bit, you've had some appreciation in the market, you have some what we call equity now. You can choose if you want to trade that equity for another property, or if you want to keep this as a rental and move on to the next property. But you have to take a position.
Yeah.
That's the thing. And so fortunately, and credit to her, she decided to take that advice. And I've buried her now in a mortgage that she has to pay every month.
Now she has to produce.
It has to produce, right? But no, I mean, and so I gave you that story just because I think it illustrates the example I'm saying. You've got to take a position.
Yeah.
And then hold that position.
So, that's awesome. So what I heard you say is if you were just getting started, you would try to get into a home as soon as possible.
Yeah. And that's what my wife and I did when we first moved up here. We had to rent for, I think 6 or 8 months, and then we bought a house.
Yeah.
You know, as fast as we could, get
Yeah.
into the market quickly.
Yeah. Yeah. That's awesome. That was pretty much all my questions, Josh.
Well,
And,
you're easy, man. Thank you. Well, I have a few questions for you. Right?
okay.
So
All right.
when it comes to financing, I mean, how do our customers and potential clients, how do they really prepare themselves for getting financing?
Getting
Like,
a
what are
mortgage.
some like tips that you would give to
Yeah.
them in terms of, you know, what to be, you know, what to watch out for?
Yeah, it's a good question. So a lot of times I get potential homeowners that come to me and say, "I'm not ready to apply yet. I want to do this, this, and this, you know, before I come to you and talk to you." And I always tell them, "Hey, that's actually, let's flip that around. Let me help you do that.
Right.
Let me help you." So my take on that would be, you know, talk to your lender like as soon as possible. Like if you want to get in the real and buy your first home, even if it's 2 years down the road, talk to your mortgage guy
Yep.
as soon as possible, because they're going to tell you everything you need to know about credit, where your credit. A lot of people don't realize that the credit score, you don't have to have like perfect credit.
Right.
A lot of people think that they need to pay down their stuff before they, you know, go buy a house, and it's not true either. I
Right.
mean, so talking to a lender
Yep.
that they can get advice from. And it's free. It's like you're not paying the lender until the loan closes, but the lenders are there to help you.
Yeah, they're kind of counseling you, right?
Yeah, absolutely.
I'm so glad you brought that up, because this is something actually we talk to our agents about a lot. Is, you know, because we tend to get connected with our clients 6 to 12 months in advance.
Yeah.
You know, it's way earlier
Huge.
now than it ever was
Yeah.
before. I mean, 20 something years ago, I mean, we were talking to when they were a sign call, wanted to go look at the house to buy it,
Yeah.
right?
Yeah.
We're catching them
Different.
6, 12 months
Yeah.
before. And then now you have this opportunity to build a relationship,
Yeah.
and then make some recommendations like you just said.
Yeah.
And I call it shuffling the deck. It's like if you talk to the lender, they might have you kind of reshuffle some of the things you're doing with your finances,
Yeah.
so that your credit score goes
Right.
up and what you pay for a rate goes down.
Yeah.
By the time you go to shop, you either can buy a better home or you can buy the same home but at a lower cost.
Yep.
Who doesn't want that, right?
Yeah.
And so the consulting piece, I think, is huge. So I'm super glad you brought that up.
The other side to that is self-employed.
Yeah.
Self-employed families
Yep.
that own a business, hair cutters or hairs. You know, there's so many small businesses. Reading has a
Sure.
lot of small businesses.
I'm
A
so
lot
happy
of-
about that too. That's what I
Yeah.
love about our community.
Yeah.
Yeah.
It's-
But they have to figure out their mortgage because of that.
Yeah, because there's many things that you can do as a self-employed borrower, because, you know, most self-employed borrowers, they don't want to pay that, you know, they want to, including myself and everyone, we all don't want to pay, as, you know, a lot of taxes
Right.
to the government. Obviously, makes sense.
Sure.
That's our, you know, that's why we're self-employed. But at the same time, Fannie Mae and Freddie Mac, they only use the net income
That's right.
after the expenses, and I get that. And so for self-employed, the earlier the better, even more so for a W-2 employee.
Yep.
The sooner, you know, if it's 4 years down the road, you're just starting a business, and, you know, let's start strategizing right now, because there's things that self-employed borrower can do to not pay taxes and get the income, like depreciation,
Yep.
business. There's many things that they can use for both sides and get a win-win.
Yeah, no, I totally agree. I think
Yeah.
that's super wise, and, you know, not that I don't like to pay, you know, taxes, and I'm certainly confident I'm paying my unfair share.
Yeah.
But I consider it to be a privilege, and it's probably, you know, the cost of rent to live in a great country.
Absolutely.
You know what I mean?
Yeah.
But on the flip side of that, I don't want to pay for everybody's taxes. So yeah. So let's definitely get that advice in advance.
Yeah, definitely.
Good call.
Cool. Well, thanks a lot, Josh.
Thank you
really
too, man.
appreciate it, man.
Yeah, appreciate
this has been
you.
awesome. Super good time.
A lot of fun. Thank
Yeah.
you.
All right.
All right.